What if I told you that the most dangerous gambler isn't the one at the casino roulette wheel, but the one sitting behind a wall of sophisticated trading monitors, speaking the language of a professional? He has the tools of a trader, the charts, the indicators, the economic data. He has the vocabulary of an analyst, able to discuss support and resistance, market structure and sentiment with fluent confidence. But he possesses the heart of a gambler, driven by impulse, hope, and the thrill of the big win. He wears the clothing of an analyst, but beneath it lies the soul of a high-stakes poker player, ready to go all in. This is the story of the most deceptive figure in the financial world, the gambler in a trader's clothing. And today, we will unmask this figure through the story of Marcus, a man who fooled everyone, including himself, and the painful journey he undertook to finally align his actions with the identity he so desperately wanted to be his own. The Architect of Charts. Our story begins in a sleek, modern apartment in Zurich, Switzerland, a city synonymous with precision, wealth, and sophisticated finance. This was the kingdom of Marcus, a man in his early 30s who appeared to be the perfect embodiment of a successful Forex trader. His home office was immaculate. 6 4K monitors were arranged in a perfect arc, displaying price charts, economic calendars, and data feeds from the world's leading financial news agencies. On his bookshelf, thick trading tomes were neatly arranged, from John Murphy's Technical Analysis of the Financial Markets to Mark Douglas's Trading in the Zone. He could discuss Elliott wave theory or intercurrency correlations with a fluency and confidence that was both impressive and intimidating. Online, Marcus was an expert. He frequently posted complex and sharp-looking chart analyses, complete with annotations filled with technical jargon. His followers admired his knowledge and his unwavering confidence. And most importantly, Marcus himself believed in this image with all his heart. He believed he was a disciplined, data-driven trader, guided by logic. He believed he had left emotion behind. The crack in the facade. But beneath the flawless facade of professionalism, there was a hidden crack. One morning, Marcus was analyzing the AUD-USD pair. He brilliantly identified a head and shoulders pattern nearing completion. His well-written trading plan stated unequivocally, only enter a short position after a candle closes decisively below the neckline. This was the decision of a disciplined trader. He waited patiently as the price drifted down towards the neckline. And then he felt it. A familiar electric feeling coursing through him. Excitement, the feeling of, this is it. It's going to drop right now. The logical voice in his head, the voice of the architect, whispered, "Wait! Wait for the candle to close for confirmation." But another voice, a louder, more powerful one, roared back, "If you don't get in now, you'll miss the move. We both know it's going down. Get in." And Marcus obeyed the second voice. He clicked sell moments before the candle closed. He broke his most important rule, driven by a fleeting, impulsive feeling. This time is special, he rationalized to himself. Everything is so clear. Getting in a little early is just gaining an edge. This was the telltale sign, the unconscious signal that exposes a gambler's true nature. The act of constructing a complex justification for a decision that was purely emotional. The pain of being almost right. For a few moments, it seemed his decision was correct. The price plunged, putting him in a handsome paper profit. He felt a euphoric rush, the satisfying feeling of proving that his intuition was superior to his own boring rules. But then, the market delivered its lesson. By entering too early, he had jumped in during a period of high volatility at a key level. The price executed a violent whipsaw, spiking back up just enough to hit his stop-loss with surgical precision. And immediately after he was forced out of the market, the price reversed again and plummeted in the exact direction he had originally predicted, continuing on to what would have been his profit target, but this time without him on board. He sat motionless, staring at the chart moving towards his would-be goal, a hollow feeling in his stomach. The euphoria from moments ago vanished, replaced by a pain more complex and agonizing than a simple loss. It was the pain of being almost right. He hadn't lost because his analysis was wrong. He had lost because of his own impatience. He had lost because of the gambler's instinct hiding beneath the trader's clothes. In-depth documentary, The Tools of a Trader, The Mind of a Gambler. Marcus's situation is the very heart of the conflict that many aspiring traders face. It's a state of cognitive dissonance. Cognitive dissonance is the profound mental stress and discomfort experienced by an individual who holds two or more contradictory beliefs, ideas, or values at the same time, or is confronted by new information that conflicts with existing beliefs, ideas, or values. In Marcus's case, belief number 1, I am a disciplined, logical trader. Action. I just broke my own rules and entered a trade based on emotion. This conflict between his perceived identity and his actual behavior creates intense psychological discomfort. The human brain, seeking harmony, will do almost anything to reduce this dissonance. The easiest and most common way to do this is through rationalization. Instead of accepting the painful truth, I made a mistake because I lacked discipline, which would shatter his primary belief about himself, Marcus's brain creates a sophisticated narrative to protect his ego. He tells himself things like, this wasn't breaking the rules, it was adapting to a unique market situation. Or, my intuition is part of my edge. It's an art, not a science. This rationalization is incredibly dangerous because it allows the hidden gambler within to survive and continue to operate under the respectable mask of professionalism. It treats a bug in the system as a feature. Furthermore, Marcus is a victim of the illusion of control. This is distinct from the illusion of skill that a complete novice might have. The illusion of skill is believing luck is skill. The illusion of control is more subtle. It's the belief that having more information, more data, or more complex analysis gives you more control over an outcome that is, at its core, probabilistic and contains a degree of randomness. Marcus believed his 6 monitors, his technical jargon, and his complex charts gave him a deeper insight into the market's future than was actually possible. He therefore felt he had the right to bend the rules because he thought he knew better. This self-deception is the essence of a gambler in a trader's clothing. The problem isn't a lack of knowledge, but a lack of honest self-awareness about one's own nature and the true nature of the market. The chase for vindication. The pain of being almost right was severe. It lit a fire of frustration and ego in Marcus. He didn't want to win back the money he lost. He wanted to prove that his analysis was correct. His mask of calm professionalism began to crack. He started chasing the market with a quiet fury. He entered trades on lower probability setups just to prove he could call the next move right. His decision-making was no longer focused on consistent profitability, but on seeking validation from the market, a validation the market never provides. He began talking to himself in the language of a gambler. Just one more trade. If this one wins, I'll stop for the day. This time has to be it. The technical sophistication he once used as a shield was now cast aside, leaving only raw emotion to drive every action. The suspense for any outside observer would be in watching this seemingly perfect professional slowly and methodically self-destruct, all while telling himself he was in complete control. The mirror of truth. Marcus's unraveling did not happen in a single catastrophic margin call. It was a slow bleed, a death by 1,000 cuts over the course of a single terrible week. On Friday night, after the market had closed, he sat amidst the wreckage. His account was heavily damaged, but what hurt more was the feeling of profound confusion. What happened to me? As was his routine, he opened his trading journal to conduct his weekly review. But this time, something inspired him to do something different. Normally, he would focus on the charts and the numbers, analyzing the technicals of his wins and losses. This time, he decided to ignore the charts entirely and read only the comments reason for entry column he had written for every trade that week. He began to read. Trade number 1, AUD USD. Entered a bit early because I felt it was about to move. Trade number 2, GBP JPY. Chased the price because I didn't want to miss out after the initial breakout. Trade number 3, XAU USD. Increased risk size because I was ever confident this trade had to be a winner. Trade number 4, USD JPY. Entered to make back the loss from this morning. He kept reading, his eyes scanning down the list. And then the horrifying truth washed over him. The words according to the plan, confirmation signal, or statistical probability were nowhere to be found. His journal was filled with words like felt, confident, wanted, afraid. His journal didn't read like the log of a trader. It read like the diary of a gambler. In that instant, a mirror appeared before him. The mask of the expert trader he wore so proudly shattered into a million pieces, revealing what lay beneath. The face of a scared, emotionally driven gambler. He hadn't been fooling anyone else. He had only been fooling himself. The acceptance. That realization was as painful as a lightning strike, but it was also liberating. Marcus stopped blaming the market. He stopped creating complex rationalizations. He accepted the simple truth. He had the tools and knowledge of a trader, but he had the mind of a gambler. He didn't lack the ability to analyze. He lacked the ability to execute. In-depth documentary, Diagnosing Your Inner Gambler. The checklist. Marcus's story brings us to the most critical question. How do we know if we are trading like a trader or gambling in a trader's clothing? Here is a diagnostic checklist based on psychology that you can ask yourself. How do you feel right before you enter a trade? The gambler feels excited, hopeful, a rush of adrenaline. The entry is the most exciting part. The trader feels calm, neutral, perhaps even slightly bored. The entry is merely a step in a predefined process. What do you focus on before you enter? The gambler focuses on the profit they could make. They fantasize about the big win. The trader focuses on the loss they could take. Their first question is always, if I am wrong, how much will I lose? And they ensure it's an acceptable amount. Do you have a written trading plan? And do you follow it 100% of the time? The gambler might have a plan or might not, but they frequently break the rules when they feel that this time is special. The trader has a clear written plan and treats it like law. Adherence to the plan is more important than the profit from any single trade. What is your immediate reaction after a loss? The gambler feels angry and immediately looks for an opportunity to win it back. The trader accepts it, documents it, and if necessary, takes a break to clear their head. Where does your confidence come from? The gambler. Confidence comes from the outcome of the last trade. A win makes them feel like a genius. A loss makes them feel worthless. The trader. Confidence comes from their process and their belief in their well-tested plan, regardless of the outcome of the last trade. Answering these questions honestly is the first step in unmasking and confronting the gambler that hides within all of us. Building the bridge. Marcus didn't discard the knowledge he had accumulated. Instead, he shifted his entire focus. He began to build a bridge to connect his analyst brain with his executing hand. That bridge was built from a simple, non-negotiable checklist. Before he could ever enter a trade, he had to answer yes to every question on a physical piece of paper next to his keyboard. Does this setup match my written trading plan perfectly? Yes or no? Have I calculated my risk to be no more than 1% of my account? Yes or no? Do I have a clear, predefined stop loss and take profit level? Yes or no? Is my emotional state currently neutral? Yes or no? If even one answer was no, he was forbidden from taking the trade. The final scene of our story. Marcus is sitting at his familiar desk. He sees an almost perfect setup. It's incredibly tempting. The gambler's instinct inside him whispers, "This is the one, you know it!" But he stops. He takes a breath. He pulls out his checklist. Question 1. Yes. Question 2. Yes. Question 3. Yes. Question 4. He asks himself, am I neutral? The answer is no. I feel too excited. And he moves his mouse away from the sell button. He sits and watches as the price moves in the direction he predicted without him on board. But this time, he doesn't feel regret. He feels a quiet sense of victory. A victory over his own impulse. Finally, the clothing and the self had merged. He had become the architect who not only designed the blueprint, but also built the structure, brick by disciplined brick. And that was Marcus's journey. A story that teaches us that having the knowledge and tools of a trader is not enough if the mind is still that of a gambler. The real battle is not in correctly analyzing the market, but in aligning our actions with the person we claim to be. I want to invite you to share your story in the comments below. Have you ever had a moment of realization that you were wearing the clothing of a trader, but making the decisions of a gambler? And what is the checklist or rule you have created to help you stay on the right path? Finally, if Marcus's story was helpful to you today, or if it made you think your like is the greatest encouragement for us to continue creating this kind of in-depth content, and so that you don't miss out on the next in-depth documentary and trading psychology analysis, don't forget to subscribe and hit the notification bell. For today, thank you for watching, and we'll see you in the next video.